There's three types of indicators on the order flow, right? What it is, and we talk about, because we're getting data, there's a three level of data by specificity and side of the market. So now, when you're seeing on my website, I'm saying, do you trade all sides of the order flow, all levels of data? What I mean is that footprint, it is the aggressive side of the market, and the heat map, it is the opposite side of the market from the passive sides or from the resting orders. And what happens, the resting orders, that's exactly what they are. They're sitting the orders. When you put, by the way, when you put you take profit, when you put you stop loss, those are orders as a resting order sitting on the book. They're not moving, right? And when you and I, we usually enter, we enter by market. So the buy market, it is the aggressive orders, because by market, if I enter right now, I want to get best closest to me on the other side of the market. So there's the four participants on the market: buyer and seller, and buyer and seller. One side is the aggressive, another side is passive or resting orders. So interaction of these four participants reflected through the bunch of different indicators as the flow of orders by matching the orders from the opposite side, aggressive and passive. Now, that's what we were talking about previously, and the heat map is this a passive side of the market, and the footprint is the aggressive side of the market. And icebergs, definitely, it is a hidden type of the orders. We call them on data level 3, although it's a nickname. It's a simply more detailed level 2 data. It's data by single order. And this is so specific that we can see the icebergs the way that those who are submitting to the CME and pay for the services, they actually entered silently or invisibly from others as possible with the icebergs to fill their orders, because the orders are big. And if you are big, you don't want to move the price dramatically fast. They try to enter with the smaller and invisible parts, which are the icebergs. Okay, so there's a bunch of indicators, as you can see over here. There's a level 1 data, and because of the level 1 data, we can see a number of indicators based on the level 1 data. Based on the level 2 data, we're seeing the other indicators right over here, right? And then based on the level 3 or detailed level 2, we can see the other set of the indicators. So the order flow indicators are not the only footprint. And because there's a three type of the data, we talk about that there is some platform like a trading view is not feasible. It's not the order flow platform. It's a platform not built for the order flow. The order flow platform is like a Ninja trading platform is actually built for the order flow type of the indicators and information, right? So this is the volume profile, and this is the footprint. And what we can see there's like you can see the histogram over here. It can be a level 2 histogram over here. Over here is a level 3 histogram. Level 2 can be a indicator like pulling and stocking, quite rare indicator, but it is a really, if you use that, you will crave to use it every single session. Now, what is the other things we talk about? We talk about the bid and ask. So the bid and ask is not because of the color is actually red right here, right? But this is the bid, and this is what? This is the other side, and the matching of this orders happening this way. This is the four participants for the market, and 1, of course, then 2, then this is 3, and this is 4. So the order flow reflects this kind of orders when the orders are matching from opposite side with all four participants, basically. But we call this bead in red, or in this sense right here is orange, because not because this is the bid, we call it bid. This is the lingua because they actually matching with this bid. This is the buyers. This is the buyers. This is the bid sitting on the passive side of order flow, right? And this is the ask, okay? And the colors here are red and the colors over here are green. Why? Because these buyers, they buy and these guys are selling, okay? So that's like in a nutshell what we were talking about. And what's interesting about the order flow, that order flow is based on bid and ask, which give us a delta. Okay, so the delta is responsible for many indicators. There is a delta by time and there is a delta by price. Okay, this is the delta by price and this is the delta by time. So usually you can see the total number above or below the candle, which like, okay, 300 over here, if it's negative, or like whatever, 150 here, if it's positive, right? Something like that. Now, this is the usual way to see the total delta. When you see the total buys and minus total sells, now you get the total delta. Total delta reflects only what happens in this very candle. This is the delta by what? The candle bar reflects the time. If this is the 30 seconds, this is the delta for the 30 seconds. So now, if we take a look at this indicators out here, so okay, now this is the delta by time. Total delta is right here and right here. We can see that indicator below the bar. Usually, it is at the footer, and it's visual presentation of the totality that happens over here and over here, right? Or over here and over here. And sometimes I found that it's not really practical to wait until the candle gonna complete building. Because what? When you, for example, use scalping, then you would like to know how this particular chunk of the candle is behaving, who more buyers or sellers, who is trying to, the war of tug war is outperform the others. And that's why there is a new indicator that we put on our footprint. It's called the delta blocks, okay? And this delta block, it is a calculation for this chunk. You can tune that delta block in the footprint settings. And this is delta block is 311. So instead of me calculating all of these buyers over here, I can see them immediately right over here. And I see the other line. This is the delta block with a blue kind of like color left of the main bar, green. That is the delta block. And delta block is the really fast, quick way to see what's going on while this candle is still in the process of completion. That's really nifty. Depending on the situation, it's really good for scalping, for example. This is the other way to see the delta as the delta blocks. And not many footprints actually using that. So we actually incorporated the delta blocks. Now the imbalance is built on the delta as well. So what is the imbalance? Now, usually by price, you can see the 0 and 10, you take 10 minus 0, is going to be positive delta 10 right here, right? This is the delta by price. But the imbalance, because we have the bid, and we have the bid and we have the ask, and there is a gap in the price, right? And buyers, for example, and sellers not on the linear kind of the way to each other, they are on the diagonal. Okay, this is the correct way. So we comparing this sell 3 with this buy 38, and the ratio between them, how many times the one side is outweighing the other side, is becoming imbalance. Yes, I know the people on the ICT type of mentality, they believe in balance something else. But we're not talking about the ranges and the extension, which they believe that this is the imbalance. And it is. We call the imbalance based on the data based on the delta. So we're comparing the delta this way. And when you see that, for example, in my settings, it's usually at least 210 or maybe 310%, right? It needs to turn any numbers like you're seeing in green into the kind of blue and bold so I can see them immediately. So the footprint is built this way that you can see visually faster than you can calculate in your brain. So all of our indicators more visually tuned to give you the trigger or understanding what's going on or changes going on more visually than the mathematically, because there is a mini old type of the footprints. I'm not going to give you a name of those packages, but they're simply outdated and it's a really old school. It's a new way of presenting the bid and ask. And one of the way it is the imbalance. So imbalance by price. Now, when these imbalances, they call them stack imbalances, one after another, and there's no something in between. You can mark it on a footprint if you want to have three of them to become a zone. This situation taking from over here, this is the zone. This is the zone, imbalance zone, and it's based on the delta. You see, the calculation of the delta in different ways will give us, different indicators. Isn't that really interesting? So now there's about more than 10 indicators that based on the delta, but on the footprint you can put like this is bid and ask side. You can have the delta on another side. Okay, this is the delta side. So you don't have to like calculate all of this. You can see the numbers linearly can be calculated this way. And so 186 minus 161 is going to be 25. Whatever way you want it to, our footprint is capable to deliver you the way that visually appealing and simplified for you. Like, for example, this is the only delta on the footprint. So you can see instead of bid and ask, you can see, if you wanted to, only the final outcome, what happens between the bid and ask. You can see the delta right there on the footprint if you wanted to. So it is a really simple way, but sometimes instead of like people putting the indicator delta or a volume profile and turn it to a delta function, like what we have, and you can do it. But it's always needs to be like you need to move this indicator along with your chart. And instead of that, we have a solution that you have on this candle that is developing right now. You can see all delta situation right on that very chart. By the way, our footprint also have the volume profile built on the left side if you wanted to. So instead of adding the volume profile indicator, you can see it on the particular candle as well. So we put functions from 4 different packages, from 4 different footprints into the one that we decided that it is the most needed one. So we united them into the one footprint. Okay, now this is also based on the delta. You can see easily that it is linear by price level delta, and you can see like 208 minus 42 is going to be what? Positive 166. You can see the bubble right here, which is market delta, and it gives you that delta right in the bubble. So what is the difference between the footprint reflecting you delta like that and the bubble? There's no difference. You see this bubble 106, it is the delta 7 minus 113. You're going to get 106 negative delta. And what's the difference between looking only at the footprint or looking only at the bubble? You can actually use the candle and don't even have the footprint out there. Because if you want to slim down, make your charts cleaner, more transparent, you can only use the bubbles like that. So it's a different way to present the same information, nothing else. So, okay, let's go to another chart, but this is a little bit unique and not many people use that because they don't know that we have this. This is very rare function when you have the delta style footprint. And you see this delta zone that's generated right over here. You can see the delta histogram right over here. This is the delta. There's the delta blocks out there, and you can see the delta zones. This is really powerful. This is a one delta zone. That's another one, and that's another delta zone out here. So definitely, if you put the delta zone on the whole session, and it was developed like early somewhere like over here, you need to be careful when the price is going in opposite direction, then the same delta may become what? It was supporting on the way up. Now it may actually becoming a resistance. This example of the delta, and we also have a range profile, range volume profile, and on the range volume profile, there's a, if you buttons right at the top, you can change it to the delta. It's a third option on this range profile, and this is the red delta. Definitely, there's some green delta on this range. Okay, you put this on the range, and it's really good because sometimes the volume profile that's built in with an INSA is not relevant if you do it for the whole session. Rather, you can put on the only last chunk of the information that is now at play and making sense to influence the future situation, probably in some way. It is a really good and nifty indicator that you can put and move onto any particular range where you can measure the delta. Like this is a really big chunk of the green delta. Look at that. Okay, so that's no wonder the price is actually moving in that direction. Along with that, you can see the volume in a semi-transparent out there with the delta, right here. It is the green delta, green delta, green delta. It is the negative delta. This is negative delta. And what's most important out here, it's not that only you can see the delta, because people think about delta flip like this one. They can consider something as a delta flip right over here. It was green. Now we flip to the red or to whatever the negative delta, and now we flip again to the positive delta, and they're like looking at this, oh, delta is flipped, now I have the signal. No, delta flip is really, be careful with that, depending of course on the time frame that you're trading as. If you're trading on a higher time frame like 1 hour, that's maybe become a signal for you in some sense, but we need to look at the pattern. Okay, the pattern, this is like what we growing in volume and we're growing in delta, negative delta. Now we start grow in positive delta over here, and this is the chunk where there's positive delta. And usually when I look at the delta, if I think about the delta as the signals or factors to enter, I consider that delta usually, I prefer myself when it's doing like a green delta over here, it's a one time, green delta over here, second time, third time, it's probably most successful. Think about the waves of the delta or the patterns of the delta, not just like a single flip like over here, one flip, and it's define you a way of trading or directional trading or directional bias. Be super careful about that, because delta is simply what? It is simply reflection of the data, a reflection of the attempt. This is another delta, cumulative delta over time. And you see this is the cumulative delta over time. And the differences between where the price is going this direction and the delta is actually saying, no, I'm more inclined to sell. Delta is more negative and negative and negative. And this is called diversion with the price. And this is an interesting situation where you can like, if delta is going lower, then I have to be super careful to long, super freaking careful. And then boom, when it start going lower, you understand, because it was actually kind of prediction of the overall delta. Overall delta sometimes can be more important than just like a delta for a single small time frame delta flip. Okay, you definitely need to think about the time frame. Okay, and now this is something that most people never seen in their life. Because of that, their order flow concept is can be updated. Okay, many people never thought about that. There's a level 2 delta. Level 2 delta, this is our indicator pulling and stocking on the sell side, pulling and stocking on the buy side. Final outcome of this pulling and stocking you can see on this indicator, which is delta 2, delta level 2, delta pulling and stocking to be correct, okay? And when I see that this is the delta level 1 on behind the volume, and the delta level 2, now they're actually looking with the same color into the same direction. And this combination can be really something interesting to consider. Like you can see, like on this particular candle, you see that there's a lot of delta 1. You see these imbalances, even one zone, second zone, imbalance zone. There's probably a third zone. So this is the delta 1. This is why it's green. And then you see, so delta 1 from the footprint, and the delta 2 is green as well. So now you can think in terms of like a combination of the delta 1 and delta 2. What's my point? My point by showing you some indicators that most people never seen in their life, because those indicators never been developed before them. But the delta needs to be considered really carefully, because some people think that, if there's a delta, the delta is telling us who is taking control over. If we're taking a look at this particular candle, yeah, we can make that conclusion. But you need to see in the context what the other, because you can see, you can get only one green candle in the midst of the like bunch of the negative candles, right, going down, down, down. Not correct to say that delta defines the outcome. Delta is attempt. Delta is initiative or attempt, possibility for something. But delta itself, if taking solely in a small time frame, in a small focus, shouldn't be taken as the signal alone. Order flow is not the system for signals. It provides us factors that you can see them as the co-factors with other things on the chart. That be very powerful in terms of the conditions for you entries or exits, right? Yes, absolutely. By itself, order flow is only visualization what's going on inside of the chart, inside of the candles, and what is causing the candle going up or down, because the traditional model, price model, is not really explaining why you get the ups and downs. It's have no idea, because the price may build this a week over here or below, and you don't know why there is a wick out here or a tail or over here. There can be two opposite reasons for the tail to build on either side of the candle, and you have no idea why. When you see the order flow, you can get the clue, this is the why. So the order flow answers the question why. What happens? Okay. In that sense, delta does not, as many people gonna tell you in their simplified version, but I don't want you to be simplified. I want you to be refined. Okay? So delta does not guarantee an outcome. It shows you attempt, does not predict the price effectiveness. That means the price will move into that direction when the delta intended in this point of time. Delta does not decide who is in control, unless you're sitting on a 1 hour chart, does not necessarily define the trend direction either. So those are misconceptions. And if somebody is with a blonde kind of the mentality, blondie, looking at, delta is now positive, I'm changing direction of my trades, be a little bit more sophisticated than that. Delta misconceptions that there is a delta can produce the failed actions, and based on the delta that failed, we also have another indicators. So now the failed efforts versus effective efforts, because now you're seeing that there is a sales delta is negative here, is negative over here, and even produced the bubble over here, but it's actually what met the imbalance, and this is the buyer imbalance, balance zone, and it's boom, it wasn't effective to go where it's intended to go. So the buyers prevented this negative delta. All of these efforts were not succeeded. Now, there's a few things you can see that delta is not successful when there is exhaustion, when there is absorption, where the absence of opposition. Then delta can be successful if there is a no opposition on another side. Not because this delta over here is amount of delta here and amount of delta here in the same bubble, this bubble, it's about the same, right? But the result over here is different. And this is the main point. So delta itself not defining the final outcome, but because there is a no opposition, there was some opposition over here in little bit positive delta right over here. But the absence of opposition can like, okay, we're gonna achieve price effectiveness because there is no opposition, not necessarily because this delta is strong. So we need to distinguish between these two. So this delta becoming, because of the other situations on the chart, more effective. So the effective efforts and the failed efforts, that's what we need to constantly ask ourselves. Is the delta have a reaction? Is the delta is effective or it's a failed in efforts? Now, this is another example. Look at this situation when the delta is trying to get lower and then it's reversing. We're seeing the positive delta came in place one time, was failed. It doesn't proceed over here. That means that when I see the huge positive delta over here, is that for me a trigger to enter? Usually, I know that from my trading system that I usually wait for the second or third attempt in delta, not for the very first. Now, sometimes it can be, but not always. So I usually wait for that was the first attempt, and now it's failed. We went down, and then boom, we build another delta over here, positive, right? So, and we even make a buyer's imbalance zone. Wow, that's significant. And look at this, when we're looking at the delta one behind the volume right here, we can see that this delta is increasing. Okay, so that means they actually have the more and more efforts adding on the next candle. By the way, if we take a look, this is a break of structure over here, and we have a next candle, and next they adding a delta again. So the persistent delta, that's what may influence the price direction. But delta is not always persistent because like in a situation over here, there was a positive delta, but there was some sellers sitting right here who are not exited yet. They try to maybe exit here, here, or here, but there is some of them remains, and the price simply give them a chance to exit again. So after they exited, there is a no more fight for sale, right? Sellers completely gone. As you can see in a closer view, the numbers right at the bottom is 1, 6 on the sell side of the bid and ask. Now that's why this is a more complete exhaustion. We're changing the direction, and this is the persistent delta. So the delta efforts, failure versus effectiveness. This is the failure, and this is the effective delta. What does that mean? That means automatically delta doesn't mean anything, but you see that was the first wave, and this is the second wave. When you know the difference, now you ask yourself a one single question when you trade. Is that the first attempt in delta, and what's going to happen? Or maybe it's a second. So usually like a third and fourth attempt more successful than the very first attempt. Okay, but it's about your system if you want to wait second, third, or fourth. Now let me go and show you another indicator that is called absorption, but it's based on the what? Failed delta. It's easy to understand what absorption means when we're thinking that is a delta that is failed. So you see the large delta bubble over here, really huge attempt. And what's happened? The price moved in opposite direction. Aha, now that's where the price is exited. So attempt was failing. Absorption usually happens at the extremes, at the top and at the bottom. There's a one at the bottom, which is negative delta, trying to lower the price and failed in attempt, and the price exited in this bar over here. Okay, so this is at the top, and this is at the bottom, and this is the bubble with the delta. And bubble itself, or a delta on a footprint, you don't need to have a bubble. But if you wanted to, you see where the bubble is, then you think about what happens over here. So we're looking not only on the delta, we always, when we're seeing the delta, we're looking at the reaction and continuation. That is, never forget when you're trading, okay, principle. Now, let me talk about the order flow cycle. Some of you never heard about that. But there is the not only order flow inside of the one particular bar, but there is a order flow cycle. If you type in any AI, it's never going to give you what you're going to hear right now, because this is a new concept, which I actually was talking about for many years, and I wonder why people don't actually discuss about that. Why it is really good idea to understand the cycle, because with understanding this cycle, and this is the ideal cycle right in front of you, you will understand the four major stages of the order flow cycle. The stage 1, stage 2, stage 3, and stage 4. When you able to look at the chart and distinguish in what stage the order flow, you can expect what next. Because usually, let's say in an ideal situation like it is right now on this kind of diagram, after stage 1, there is a second stage 2 and a third one, and then only you can, if you're doing a pullbacks, for example, this is you must know. Now, first one is the trapet. This is the trapet buyers, obviously sitting right here. Then after the price went in opposite direction, and by the way, this trap is absorption as well, but this is absorption on the buyers were absorbed. Okay, you can see the green bubble over here, or simply you can see it on the footprint itself right over here. Now, then there can be absorption happens later when the price is moving into that direction, and the price get absorbed by the opposite side on level 2, right? On level 2, there is maybe a limit order sitting there, and when delta, negative delta, is trying to push the price down and down and down, something is preventing and created these absorption bubbles or absorption delta. So you can see that there will be a reaction over here and will be reaction over here. We're going to see in a smaller details a little bit later. The main idea is to understand the flow, order flow as the cycle. After absorption, trap buyers, and there's absorption. The next stage, what I recommend everybody to look for, is exhaustion. That's a natural stage of the reversal, exhaustion. And after exhaustion, we can expect that the other side of the market start to initiate the opposite direction delta, right? Delta or momentum or candles into opposite direction. And then we can see the break of structure over here. And this is, it's called the extension, or when the price is extended, that's what it means. The price is extended or imbalance, because price is getting thin over here and get out of the imbalance, because balance was right over here, okay, the range, or this whole range is the balance. Now we getting out of the imbalance with this extension, and we can expect the trend continuation. This is very typical scenario, and is the typical and ideal scenario for the order flow cycle. Why is that so? Because in real life, you can have the some of the stages can be barely noticeable, or maybe completely no absorption, and the price simply go like this, or there will be absorption really vividly and easy to see, but there will be hard to see exhaustion, and price can just like go like this. Is that possible? Absolutely. But if you're looking for the reversals or the pullbacks, that this stage is super important. Let's take a look at the variation of the order flow right here, because after the trap, absorption, and exhaustion, we can see that in initiation or the ignition on the buyer side was failed first time, then we get retest a little bit, and then we continue successfully. This is really important stage when we're looking, because there can be not enough efforts on the buyer side over here. So because of that, we can have this model as well. The price can go build one plateau and then try to ignite in opposite direction, but unsuccessfully. And it's going to be a failed initiative on the buyer side. And then the price doesn't have enough juice. Then it's going to give up and let the price continue fall. And then it's going to be second plateau or range over here where you can see, now the buyers will really step in. And when they step in, now we need to look that if that was absorption, for example, or if that was the failed position for the failed initiative right here, we must consider to enter not over here, although if you are very aggressive, you can be, but only after we pass this particular zone of resistance, then we can enter into trade. It can be a bunch of variations of this order flow cycle with the multiple more than just one attempt. None of these cycles like verbatim, but you will see variations of that easily. Now, when we going dubby down in terms of the stages, on the first stage, let's do quickly trapped traders. In this situation, it is the buyers. You see this buyers imbalance, two of them over here, two of them over here. There's like three of them over here. So there's some buyers sitting right here, right? And they actually trap it because the price left from the stop and absorption, boom, price ended up over here, leaving the candle right in this position. What happens here when you see a small amount, this is probably in an Asian time, but when you see minuscule, it's not really significant because price may not use that as a magnet. Number one, by the way, things when I talk about the price cycles right over here, it's not necessarily that trapped buyers needs to be here, but I call it objective, okay? Objective, right? Or price magnet, okay? Price always must have the reason to return. Again, it can be trend because the trend on a higher time frame is going that direction. It can be absolutely. Continuation is the magnet, or the trapped buyers here is the another reason for the price to come. Why? Because these trapped buyers put their efforts and then they simply let other side to breathe out. They close some positions over here, okay, and let other close their positions over here. And then when there's a no more negative delta, the price will return maybe on its own. Or these people over here who are sitting in a trap, they will put double efforts to return at price to this level. Why? At least to mitigate, to match these orders and let the buyers get out of the trap. So there's a reason. If this number of the buyers sitting in the trap significant, large, then there's a reason for the price to return back. And that's why I explain about trapped buyers. These buyers sitting over here, not really significant. This is probably on gold. But if it's early Asian session, maybe it should be abnormal single imbalances right over here. When there is an imbalance zones, it will be highlighted with this kind of like a semi-transparent green zone. So if you see the abnormal amount of the trapped buyers here or abnormal amount of trapped sellers over here, then this is the keyword abnormal, not just any. Sometimes, yes, price can come back to even whatever because of the main trend. It can be, but what we're looking as the signals, let's say, or as something that we're concerned about is the word abnormal, the abnormal imbalance zones in the same direction. But the key is that this is the magnet. Because if the price decides to go lower, it can go lower for who knows what time. It's not always promise you to come back. This is obviously a significant amount of trapped buyers sitting right here, right? really large. And so the price have a more reasons to come back later over here. The second stage is absorption. And absorption, when aggressive orders remain active, but they have met with heavy passive side orders opposition. So bottom line is, this is the bubbles on the aggressive side of the market, orders by market, right? And you see, boom, they couldn't move lower. Instead, this price is actually bounced from over here, bounced over here. So you see that if you price levels like probably about 15 or 20 price levels, the price is actually bounced in opposite direction. Okay, then we re-enter again, boom, we are over here and we moved. You see how much we moved? Now we moved again in about a 15, 20 amount of ticks or price lines. And this is the absorption. Absorption doesn't mean that the price is now going to reverse right here. It can be, absolutely. But sometimes it is a prediction for the next plausible and logical stage as the exhaustion. So sometimes these guys needs to try so many times until they get out of the fuel, out of the juice. Now you can see that on the delta, on the footer as the negative delta right over here. That's how you see the bubbles, and you look at the candles. You can see that clearly just by looking at the candles. You don't need even bubbles to look at that. Look at this. You don't really need the bubbles because you see this negative delta is boom, 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 building, building, building. You see so much. Now, usually that is the still a large amount total delta. Total delta is 105 over here, right? How do I know it? Because this is an order block right here. 105 negative delta. But look at the specifics. So that the negative delta in a true absorption will diminish at the end. Look at this. This is 5, this is 7, this is 11. So there's a more over here. So this is the normal structure for the absorption on the candle, if you want to see it only on the candle. But we also added another indicator right there on the footprint to measure what we measuring. We're measuring not only that it was a negative delta, we're measuring amount of ticks the price actually bounced. Look at this green rectangle. And this is indicator absorption that you can tune on the footprint. This is the absorption section on the footprint. And this indicator with the green rectangle, they show the price moved in the opposite direction. You see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 price levels at least. This indicator is the absorption on the footprint. And we added it because there's a bunch of the other indicators that usually give you, oh, if you see the bubble at the end of the candle, that's absorption. Heck no. It doesn't have to be absorption. If there's a no bouncing from here to over there, be careful. This delta may continue. That is the key. If you look at the Bookmap or the Heatmap or the many other software, they're saying you, oh, I see the bubble at the end of the candle. It's absorption. Dude, this is the half true. Be super careful when somebody is just based on the bubble or a negative delta is telling you. The true absorption is the kick or bounce in opposite direction on the certain volume, which you can tune in the footprint settings, and on a certain price levels. How many of them? There's a 10 price levels. This is really strong actual indicator for the 10 price levels. Usually I do like 4 or 5 or 7, but this is like, that's exactly what the settings it was right here. What is the true absorption? Absorption can be visually absorption or can be actually detected absorption. This is detected absorption on the footprint. So just be careful. One single absorption is like you're seeing in the previous slide, maybe sometimes is not enough. When the price is just moving something like this, you can see there's absorption here, the absorption here, the absorption here. You can see multiple absorption. Delta itself is not a predictional tool. Sometimes the passive side of the order flow and aggressive side, these guys can go and jump into the aggressive mode on the aggressive side. They can play on both sides of the market. They simply delete this order and go with the aggressive side. Okay, go on the footprint. That is why we need to consider the price reaction, not only the delta. So single or multiple absorptions, price bounce and reacted, failed efforts leading to a hiccups. Yeah, so the delta can lead to a hiccup when the price is simply going down, and you can see that there's a hiccups. And if you take a look at the Wyckoff specifically, which most of you must know what the Wyckoff structure is, and the price is giving you a certain hiccups. This is the Wyckoff structure, and this is the hiccup. It will be absorption usually over here. You will get absorption here. You will get absorption over here. So there's a multiple absorption, and it simply highlight you Wyckoff structure, which is super aligned with the order flow. When you take a look at any classical structure on the Wyckoff and you apply the order flow, you will like, oh, now I understand Wyckoff even better than people who using only Wyckoff. Okay, what is the point? The point is it can be a multiple absorptions. Now the next stage after absorption is the exhaustion. And what is the exhaustion? Sometimes we call it the finish it actions. You can find it. Somebody call it finish it action. That is the exhaustion. When the exhaustion happen at the end of this, if this is the sellers, you will see the very small number 1 or 2 on the selling, because this selling delta will be minuscule or really small over here. They completely give up, the sellers over here, because the buyers took over. But nonetheless, you see the small numbers at the bottom of the candle. That means the sellers, they exhausted in their fuel. It's called the finish it action. You will see drop off in the volume from the previously dominating side. You see, this is the drop in volume. This is actually the volume profile sitting on the left side. And you see the volume over here is going down. And this is a really good indication, and on absorption and on the exhaustion. When the volume at the end of this candle on this tail over here is going lower. So lower the volume over here, the better, specifically if this situation repeat in the 1 or 2 or 3 candles after another. This is another illustration. So the seller is exhausted right over here. You can see there's a high sales in delta over here, minus 66. And then on the next candle, what you're going to see, there's only like 2 and 2 on at the very bottom. Okay, now over here you can see 1 and 2 instead of like over here like 15 or 11, right? You compare it side by side and you're like, oh, this is like, okay, yeah, we definitely have a less efforts on the seller side. They exhausted. This is the good illustration of that. So aggressive sellers orders flow slow down. They naturally slow down, okay? There is maybe no even resistance out there, no any kind of zone, no heat map, liquidity, or buyers on the opposite side of the market is not even stepping in. It is simply getting out of the fuel, out of the juice, okay? So, and it's naturally runs out of the steam. We can take a look at this one, buyer's exhaustion at the top. The same situation, simply on another side. You see that this is the positive delta, really energetically believe that they're gonna go upper, they move upper, but not really significantly too much, because right over here, you see there's a 2, there is a 3, there is a 4, there is a 1. So this is the sign of exhaustion on the buying side. So basically the same pattern, just on the opposite side. So it was a third stage. And now in the ideal cycle of the order flow, if you're looking for the ideal reversal or the pullbacks, you will find the stage number 4, which is ignition or initiative. When the opposite side, now we were going down, now this is the absorption, and now the opposite side is taking over. This bubble, specifically when it's in the middle of the candle bar, really mean a lot. This delta in the middle of the candle mean a lot. When you take a look at this candle, you can see there's like a significant efforts, because this is the one zone This zone is the buyer's imbalance zone, this particular imbalance zone out of the 4 stacked imbalances. And when the price will come back, there is a chance that they will wake up these buyers to prove are you there or not. So it can be a resistance zone as well if the price will try to come back. Actually, price tried to come back, and what happens? Fail it to go lower, okay, because of that buyer's zone right over here. Now, we can see that the buyers over here, they persistent. It's not just the one flip, okay? It's just like it's additional efforts over here. And persistency, that's what make the really final outcome and the price succeed in the direction that they would try to go to, okay? So the initiative must be strong and persistent enough to overcome big trades on the absorption side. For example, if you like seeing the absorption on the way down, what's happened over here, and you can see the bubbles, you want to see that this price actually went higher, maybe even reacted, or even not reacted, but got the retest of this. Okay, if the price went higher than the previous, then this, let's say this is the red bubble because we're going down, right? And the price overcome those sellers. Excuse me, this is the sellers. I should use the red color for it. Okay, this is the sellers, okay, sitting over here. On the way down, there was absorption or something like that, a large delta over here. But if the price on the way to fight is actually now overcome this particular level, price level, and like over here, reacted, find a support, and boom, continue. We're looking for this reaction. Not just like, this is not an indicator to enter right immediately. It can be a little bit aggressive, entries on our side. Okay, let's go to the next one. And now this question is really big because if you're gonna type in any search, you will not find the answer, or you will find the opposite answer. I did it like 5 minutes before this presentation, and I found that the market moves by what? And this is, guys, typical mentality, typical thinking, because usually, the most common is situation that aggressive and passive sides of order flow inherently in unison. Why is that? Because every sale need to meet buyer, and every buy on this side need to meet seller. So they kind of in unison in that sense, right? So because the passive side is liquidity provider and the aggressive side of the order flow is aggressive liquidity consumer, right? But that's not what I'm talking over here. This is really new concept for people who never seen indicators, which you're gonna see below this slide, okay? Soon, okay, just a second. But this is the common answer that any chat GPT gonna give you. But the passive side of the market can manipulate the price as well. How? Simply, if the price, let's say, going in the upper direction, right? And the buyers add more and more and more liquidity over here. So any attempt for the price to go lower is absorbed. Go lower, absorbed, go lower, absorbed. They simply add it and add it. So if there is a wall right below the price doesn't have to, price doesn't have other choices but to go into the less resistance direction, right? And let's say at the same time, while this is building the immediate support for the candle, okay, for the price, these guys on a seller side, they may create the vacuum. They may remove. You're seeing that previously that there is an indicator pulling and stacking. They pull away their orders over here, they pull and create the vacuum, and you can see vividly. Even sometimes price may come to this certain price level one time, second time, but believe me, usually after the third or fourth attempt, price is gonna go, and you will see the vacuum of liquidity over here. If they remove the obstacles or resistance, then the price may easily, not because the price strong, but because the level 2 is removed here and level 2 is added below, removed above and added below, the price will just squeeze this way. That's it. Sometimes I was observing that many times, and I found that sometimes this price even went through the level previously was hard to go through, penetrate, and then they simply return it back because it's exhausted. Ha ha ha. Is that happens? Absolutely. My point is over here that contrary to the most answers on the any AI or gurus that they gonna tell you again and again who or what moves the market. Market moves obviously aggressive side, because if aggressive side doesn't go to the passive, price will be at the same point. It's not going to go up or down unless aggressive steps in. But at the same time, I'm not talking about that scenario. I'm talking about what happens when both sides of the order flow in synchronization and they decided, obviously, this scenario is pushing the price this direction, right? And when there is a delta level 1 and aggressive side of the delta and passive side of the delta on an indicator united in the same direction, the big shifts happens when the price in unison, when aggressive side of the pressure and the passive side of the pressure united in the same direction. And you can see that on the indicator like this in the same colors. Now, this is the illustration when liquidity is removed right over here, because that was a heat map with a red volume that highlighted by red, and then it's like they drop in the volume. They create a vacuum or less resistance for the price to boom, go down. And I was looking at this situation live in a live market before even that candle was built. I saw, when the price just smack into this blue over here, I like, dude, second time it's gonna go easy pass through. Absolutely, yes. You can see it in real time. And on the situation right here below, let me take this out. That is actually opposite situation. When the price actually reached over here, its liquidity was not taking out. It's actually added liquidity. You can see on the MBO DOM or on any DOM level 2, it was added liquidity. So that means it's an immediate support. That means when the price gets scared a little bit, then if price gonna go second time over here, what's gonna happen? The price needs to use more negative delta to penetrate this level, or the price will bounce. So that is the situation. That's my point. That the level 2 with a bunch of way to manipulate the market, it may play to create the pressure like over here. Is that possible? Absolutely. Although the price, just by placing the orders on a certain price line, they may create this pressure. Absolutely, yes. They may create this vacuum. Absolutely, yes. So answer is most people believe that only the aggressive side of the market is responsible for the price to move. It is only because these people never seen how the pooling and stacking works and how the delta 1 united with the delta 2. This is the immediate support on the passive side, and this is really interesting situation. When this candle is actually going higher and higher, you see that there was a zone created over here, and you see on a heat map, this is the gold chart, okay? This is the heat map on the gold. You see immediately after the candle, right close to the candle, you see this green level heat map over here, green color heat map. they immediately added it. Like over here, you don't see it. Right over here, you see that level 2 is immediately added. This is immediate or instant level 2 support. That actually tells me when I see situation like that, and I see, okay, this is the buyer's imbalance, and I see the price actually try to test that imbalance right here. Fantastic, schmantastic. If I see that the heat map is also supported, or you can see the MBO or DOM supported right over here. This is excellent cofactor. For example, immediate support. And this is not the drawing on the chart. No, that is the actual real situation, okay? You see right over here, the immediate support on a level 2. This is greener than, let's say, this is dark. This is no support, no support. This even no support, right? Dark. But over here, you can see definitely this is the heat map support. Level 2 is supporting, and boom, you're going to see it up. Now, you can see that level 2 is supporting again, first time, second time, and now it's the third time, because right immediately at the candle, right immediately in time, you see the support right over here. That is like really a good factor. So immediate support on the level 2 that you can see. The point is the level 2 can influence the price move. Absolutely. While the aggressive side, if aggressive side doesn't participate, price doesn't move a bit. But the pressure can be built on both sides of the market. This is the point of this slide. And when the pressure unites, man, this is another situation when the buyers immediately supported. And what does it tell me? It tells me that, yeah, I see that this is kind of like a reversal pattern over here. I mean, we're moving up. And if I see another support over here, do I have another additional signal to enter into the upper side, into the long? Yeah, over here and over here. So this can be a factor or a cofactor, and usually I don't rely on any one single factor. I'm waiting for a bunch of the cofactors when both cofactors united, but one of the most strongest one that you will surprise, and that is with our indicator, when you see the pressure is synchronized, and this is when the delta 1, this is the delta 1, bid and ask delta, on the aggressive side, united with the passive side on a delta 2, and this is the indicator pulling and stacking delta, this one. When they united in the color, means the same direction, they united in the efforts, I consider that as the bingo moment, as the way that, yes, that was the first attempt to go, right? And this one is the second attempt, where it is safer for you and me to enter into the trades. Where it is, you're seeing the large positive delta over here, but you are not sure because it was actually absorption, okay? Because look at the candle itself. The candle is, boom, absorbed and finish it or exited lower right over here. So it is even lower than this price over here. Oh, dude, we're going down. When you see that this is the delta, both deltas in the same direction, you're probably going to get encouragement, okay, to step in. And specifically when this large delta 2 and the delta 1 delta in the same direction again, now this is the second time, bingo, synchronization in delta produced amazing results into a price effectiveness. Not just attempt, but now the persistence on both sides of the market give the price effectiveness, meaning the price move into intended by delta direction. Now, the order flow, when we talk about the order flow cycle, as you can see over here, this is just a random screenshot I made, and I was surprised how good it is, because it is the fractals. When we talk about the price cycles in stage 1, 2, 3, and 4, we can observe that the stages can be like 1, 2, 3, and 4, right? But inside of that, you're seeing the other fractals like that. You can see all stages here. You can see all 4 stages over here. And you can see even like this is another cycle, and even on a larger time frame, you can see this cycle. Just remember that when we seeing fractals, it gives us a sense appropriateness, when to be careful, when to stay away from the premature decisions. For example, will you trade in this over here? Maybe this you'll be trading, but will you be trading long over here? That's a really good question, because I want to talk not only about the fractals, I want to talk about the context. The context is super important, and looking at the price cycles in the context and seeing the fractals is a really good skills. Be not simply naive just to looking, oh, I found the one price cycle and you excited, but you forget to look at the larger time frame. Now, this is one, this is obviously two, and I draw that this is the third one cycle, and this is the fourth one. So it's obviously there's a four. We always need to look in this context, because without the context, this is a number one reason why you and my trade models may fail. Not because this is the wrong cycle or I don't identify one or another stage, but because I forgot that there is like a top over here, okay, the previous day top or session top or whatever the significant top from this list over here, or I forgot, where is the POC of the session, the point of control on the volume of profile? Where is the lack of the volume? For example, like if you put this volume profile over here, you can see the price actually returned. Even this is a diagram specifically on the low volume in this volume profile, and price really love to do that. Price love to come back to the low volume profile. Sometimes people call it naked volume. Now you see how many low volume profile I can signify over here, and always when there is a low volume profile, I can build some kind of the zone or resistance. So this is a really nice to understand where you are and get oriented, because if I am inside of this range, you see this range, low and high and low and high and low and high. This particular range is the most dangerous if I trade inside of this range. If you're seeing this range, run away. Don't try to trade from over here, because price can go both directions. So I highly recommend avoid this type of the structure. Is the most dangerous structure that it can be. Or for example, if you actually came too close to the previous day high, to the session high, to a significant high from this list, as you can see, this is the things to look for. Okay, 1 hour, 4 hour, whatever the significant mark of the structure above or below. And if you came right over here and you seeing the cycle starting to develop over here and you're thinking, should I go long or not? Be super careful, because that can be a false break, because that can be another repeat of the bounce from that line, like it's already happens 3 times, and now it can happen 4 times. Absolutely. So this is the disadvantage. And most of the failure that happens to you and me or any other traders happens because we don't understand the frame, the bigger frame that we operate inside. Like, give me guess what you're gonna do in this situation when you find that we already broke the upper session, previous session high. Then should I engage into the long over here? What is the answer? What should I do? Because we already 1 time, 2 time, 3 time, usually 4 time is lucky one, right? But if we take a look at the next, what happens over here, we're saying immediately the price went so low. It was actually yesterday. I was like absolutely surprised. So when we are very close to a significant extremums, be extremely suspicious. This is the large perspective. Zoom out, look at the larger perspective, and think about the context and your chances, because our chances to be lucky over here can be 50-50 or can be significantly lower. Unless you add the heat map over here, you can see actually there was a significant heat map on a level 2 resistance. It actually was the situation. Or, for example, I actually know the trader who is saying when you in a range like that, you see this kind of like a up and you see the down. This is a really like a horizontal range like this. He is teaching and he's actually charging pretty good money for this. He is teaching if you are somewhere like over here, you need to enter into toward the same direction continuity to the edges of the range, which I tell you, it is the biggest mistake ever that can be done, because this is the most dangerous position to engage, to enter. Why? Because your stop loss is going to be like this and like this. It's going to be like humongous stop losses. If you decide to trade this situation, but not from the middle of the range, never from equilibrium, you rather do it from the upper side, even if it's like a false break or like over here or over there, toward the medium or toward the middle. This is more appropriate and trade like that than from the middle. My point is, again, the word what? The context. We always needs to look at the context, environment, and circumstances. Okay, let me see what's other there. Yeah, the delta flip. Why I mentioned about the delta flip previously, because some people believe, okay, if the delta was green, positive, this is negative, it's a delta flip. Look at this. Look at this. The volume is actually going down. And any delta, if you look over here or over here, it's not the signal, or over here, because we basically staying in this kind of like a sidewalk. And the delta in a sidewalk can give you a false positive. Again, this is the false positive because we are in the range, inside of the range. This is the where you can get misdirection if you rely that the delta is the directional point. No, delta is not directional point. Delta is simply reflecting the attempt, the possibility, the what price to try, and it can fail miserably. The other context is you can use the volume profile. This is the low volume node, and this low volume node is played already right over here, right over here. So we went through again, and then we hit the high volume node, definitely resistance, and then this is the high, but below there is a low volume node. So it's kind of two of them together, and we hit that particular position. Okay, so now the volume profile is really nifty tool, and the volume for the session and volume for the range, you can actually project possibly where the price may react. Although I have the whole video that the volume profile shouldn't be used for the point of entry. It's simply one of the cofactors. Volume profile never meant for the entries. It can help you to get oriented. Why? Because the volume profile, it happens in the history right over here in that very freaking time. What's going on right now is over here. And you better look at the MBO or a level 2 data DOM, what's going on right now over here, and get the current situation. What is the pressure on the DOM? And this is the more current and more valid up to millisecond, rather the volume profile in the past. My point is, be super careful by relying on a one single tool. One single tool on the order flow is not the signal. The combination of the order flow tools can provide you environment for your trading system or trading model. And that is the skills that when you reading the chart, you're reading not only one particular indicator, but a combination of that makes sense for you. So I talk about the framework for the pullbacks and the reversals. And the framework is the context, is the location, it is the circumstances, it is the range, it is the positioning, it is the higher time frames, it is the where you are regarding the breaking out of the previous sessions. Context is more important than any single signals, okay, that we consider on the footprint. Over here, what we're seeing that this is the trapped in buyers, right? 51 sitting on them right there. So this is magnet or objective, and price actually, no wonder it's came back to that objective or magnet again. But sometimes it can give you cascading plateau like that and then come back. If the main trend direction or a directional bias for the day is going up, then yes, we can see that after we pass this bubble, this is a seller bubble, and we pass that, now this is the situation after which on the retest, I can go again into that direction. This is just an example for the trend reset and the micro pullbacks. Where do you see the micro pullbacks? You can see that there's not a ideal pullbacks that sits right over here. You see them again right here. You don't see the well-rounded pullbacks like that. Although when the whole cycle, you see, look at the whole cycle, is a really well-rounded pullback. And you can see all the stages over here. You see all of the stages right over here. If you take a look at the bigger fractal, not the smaller single fractals like that. So this is the trend reset and micro pullback. So this is the micro pullback, micro pullback, micro pullback, micro pullback. And it is pretty natural, especially on the Wyckoff's reversal. This is actually other cofactors I specifically love on the pullbacks. Okay, you see this low bar, very short body of the candle, almost like doji happens over here. That means the price is pushing from the both directions. And usually it's released energy one or another direction. So I love, and it's one of the condition for my settings on the pullbacks, low body candle, boom, and we actually went up. All 4 stages on this large structure, and you also can see that pattern in terms of the volume. Okay, volume is high over here, different pattern over here. You see the low volume over here, low volume over here, higher volume over here. Could you relate each of these volume patterns, like higher here, with the phase 4 over here, with the phase exhaustion over here? Absolutely. Or with the absorption over here? Absolutely. So look not only at the footprint itself, but the other conditions like the total volume, or you also see the delta behind that at the bottom. This is another illustrations to look at more than one cofactor. And another things that you see this resistance, this is the bias imbalance zone. This is the bias imbalance zone. So it's provided support for the direction and all of this. So look at the more than one cofactors. Volume pattern, yeah, that's what I was explaining to you. This is basically flat. This is high volume, high volume. Again, this is the high volume, and you definitely can relate to the phases. Probably the phase number 1 is right here. This is the sitting buyers in the trap, and then boom, we're seeing the first hiccup after absorption. We can see that the after absorption, this is 2. Now we're seeing another absorption. This is 2. And now we're seeing exhaustion over here is the 3. But then definitely we can see that this is the imbalance zone. Boom, baga boom. And right here we can see the large delta is springing up. After this point, I probably, after it's reacted on the imbalance zone like that, I have more confidence to enter into the trade. Because like when you trade the ideal setups, and this is the ideal setup, and if you take a look at the Wyckoff, this is exactly the Wyckoff structure. 4th phase of the Wyckoff is the most profitable. It's a less aggressive, and you will experience less anxiety. This is the perfect Wyckoff situation. And the 4th phase is right here, because what we went above this liquidity here, and this is just like a perfect entry right over here. It's just like by book. Now let's see another example I have. This point is trapped in buyers, and price what? Price returned, created the breakthrough the previous top. Now the point over here is I don't know how soon. In my book, in my mentality, if the main trend direction, the bias for the day is going up, then this is normal. I don't know how long it's going to take time This time I have no idea for the price to return, but I usually play that way, that price will return to the trapped buyers. Although I should say that because it was an Asian session, this trade, this is not really abnormal amount of the trapped buyers. I see that this is abnormal amount of the buyers, about the 100 sitting right here. So the price, if you take this fractal, return it over here. And then we're seeing that this is the re-engagement, reignition, 83 buyers stepping in. Fantastic, fantastic. So I see that they added more efforts. So this is the called persistency, right? Persistence efforts, and boom, on the buying side. This is a really good illustration. Now let's see trapped buyers and sellers. Again, illustration, trapped buyers sitting right over here. And I'm asking myself why the prices, instead of returning, it's simply going down, because it actually went in this situation longer than I expected, and boom, we return it again. Why? Because the main bias for the day, we going up. Daily bias was going up. That is my magnet, and this is additional magnet or objectives. So now we build another trapped buyers at the very top, and probably another cycle. Nobody can predict this time when it's actually happens. That's why I usually recommend to see phase 1, phase 2, and phase 3 exhaustion. I highly recommend to look at that. This is another illustration of the true absorption. And as you already now know, that we're not looking for the sellers to just smack the price down, but we're expecting the bouncing in a certain direction. And price actually bounced this much, right? This is the bounce, how many ticks or price lines the bounce. This is called a true absorption. And you can fine tune it on the footprint indicator. So this is the 6 conditions for the true absorption. You can make a screenshot and align it, because there's a not just the bubble, but when we seeing that volume is also going lower. You see this volume profile right here, going smaller, and you see at the end, yeah, there's an 8, but right there, it's a probably stop losses. This is 1, 4, 3. You see it's smaller than 22 sitting right over here. True absorption must follow all of these conditions over here. Footer delta change like this, that was red. And now we're seeing that this is green, and it's actually growing green, buying delta, and that was a seller delta. So when the delta is changing from one to another, it's a flip. Now this is the true flip of delta. Now you can consider that should be writing over here footer delta flip or a footer delta change. So all of these 6 conditions indicate it is the true absorption. Don't be naive just by looking at the bubble. Bottom line, and what is this illustration? Signs of absorption and exhaustion. Oh, okay. Now you can see that it was really a really good absorption over here with the bubbles very clearly. And then you can see at the bottom of the candle, 2 in sales, 3 in sales, 2 in sales, okay, 1 in sale. So the sellers get exhausted. They exhausted, okay, if you take a look overall. Red delta is going down. That is the trend. Don't look only on the one, just to look at the trend, how the volume and the delta in trend, what it shows you in general. And then boom, of course, now we can see that, okay, that was the first attempt to reignite opposite forces. And now we can see in this candle, we can see the delta, level 1 delta. There's a no delta level 2 indicator at this particular screenshot, but the delta level 1 is significant over here. Look at this kind of bluish imbalances that highlighted on the footprint, and boom, we went up. And the delta from green is actually growing over here. So this is the trend into the upward direction that confirm us, okay, we're going up. So that's another illustration. Sometimes it takes multiple absorptions, not necessarily we need one large big, it takes like 1, 2, and 3, and then we may expect the price will be exhausted. And why is that important? Why is that can be a really good signs or cofactors, because we believe in what? We trading volume patterns, not the simply high and lows, high and lows. We trading what's inside. And because of that, this POC, you say, okay, you can connect this POC this way. Okay, here we go, here we go. And now okay, we now start breathing. Okay, now it's probably going to be a second wave. Boom, we went up. So that is the most important places on this chart, not the simply these tops and bottoms. And the trend of that POC is a really interesting indicator to look for. Okay. Now, buyers must step in on both levels. Now, what I'm saying on this illustration is a big shifts happens when the price united on both sides, aggressive and a passive delta. When we're looking for the reversal or for a pullbacks, needs to be persistent, consistent, and really prove that it's there. It's not just the one single attempt, some of the 2 and 3 people, but the stronger force, the force that outpowers the opposite side. We're not only looking for the first initial ignition, because that was not enough, obviously, and the price went back. And now this is something that I can consider. Right now, this indicator is actually speed of tape, and this speed of tape is green, and the delta 1 is green again. And if the delta 2 is green too, then these 3 indicators provide even stronger. So on most of my videos that you watch me in the past, I use 3 indicators, align it as the confirmation or a cofactors. If this is the delta 2, okay, this is the delta 1 over here, and this is a speed of market, because many people don't know what this indicator is about. It is for each candle, but it shows you who in the tape is actually accelerating, buyers or sellers. And right now, I see that the delta 1 and delta 2 align it together, and the speed of market, speed of tape, is actually on the green side, and 3 of them give me additional cofactors. Okay. That's the point of this slide. Let's see if I have. Oh, by the way, this is quite interesting, because these bubbles illustrate the same idea that we're not looking only for delta or for large entrances or for large trades. We're looking for the price reacting. Imagine if you, instead of coloring the bubbles on this slide, you actually make all of them gray color. And then what are you going to look for? The key is over here that when we're seeing, okay, this is where the somebody is actually entered as the buyer, but the price went opposite direction. Maybe that was somebody from the hedging, and then the price actually went lower, and then boom, we went over here, and it created the zone. This is the buyer's zone. Now, this is obviously the whole structure confirms me that it is the resistance structure, because we bounce it one time, we bounce a second time, absorption, even without the bubbles. We're trading price reaction. That's what we trade. Or if you take a look at these bubbles, there's a couple of them sitting there and a couple of them sitting there. Okay, now what happens when the price, let's say you may be seeing the all 4 phases or some phases over here, right? Maybe none of them, but you're seeing the bubbles, right? Now, when we step into trade, is not because we're seeing the green bubble right over here, 267. That's really a lot. But when actually price after this bubble that is slightly higher than the previous one, we actually went higher, and when we retested, bingo, this is safer position for us for entry. So what do we trade? We trade reaction on the volume. Again, this is the golden formula. We're not trading just the volume, not just the delta. We're trading reaction on the volume. We're trading reaction on the delta. And that's really significant point from this very slide, because like, as you can see, I already draw some of that where you can enter, like this is like, again, reaction, boom, we went higher after this candle, they're close together. There's a few situations like over here when you see that the price after this bubble went higher, reaction continued down, boom, probably 30 ticks you already took on in short. Now you're thinking about what's going to be next. You're seeing that this is the triangle over here, and the pressure is actually building somewhere over here. Pressure is building over here, and there's a very teeny short candles. Aha! Now the pressure is concentrated on those teeny candles. Now what you're doing, you're waiting for the reaction. We passed the previous obstacle, these sellers, we overcome over here, and on the retesting or reaction can enter right over here. This is the good spot to enter or re-enter on the test. Key is we're not only looking at the volume, we're not only looking at the delta, we're looking at the reaction. And this is the key for any indicators on order flow. Reaction on the volume and reaction on the delta. So that's, again, another illustration. The trapped buyers, they went again, closed over here. Not always happens like that, but quite often. And this is another trapped buyers illustration. You see, the trapped buyers in really significant number, right, sitting right over here, really significant, huge numbers. And you see what happens later on. Later on, we came back. That's amazing. And you see that on a level 2 DOM, MBO DOM, you can see that this is not just a kind of like a price level, but it is like you see the sellers sitting over here. They're prepared to resist, or they actually attraction point, because from another perspective, because price is going from the liquidity to liquidity, and they provide the liquidity. We'll see what actually happens after that situation, maybe later. So that's another situation with the absorption. So a few slides like that. This is the exhaustion, because at the bottom of the candle, there is like a seller's 111. Get out of the steam over here, and over here. And this is a large absorption, multiple absorptions. We can see that another slide like this. And now over here on this slide, we can see the delta level 2 united with the delta level 1. And this is really fantastic, because that is persistence in the attempt on both sides of the market, on the passive side and the aggressive side. And when they unite, I consider it on the NISA platform, we actually have all of these indicators for the order flow on the same chart, even the icebergs, even the big trades, imbalances, heat map. And sometimes when you're trading, let's say footprint, you want to see the imbalances. But sometimes when you filter out heat map like it's filtered now really well and clean, you don't see any small obstacles right over there. You can see it clear. It's really good idea to add to a heat map the imbalance. And how do you add imbalance on the heat map? Only if you add the footprint. And there's no software out there. If you take a look at us, if you take a look at Deep Dome, if you take a look at Bookmap, none of that software can be congruently being integrated on the same chart, because this is the uniqueness of the best order flow indicators, that you can position any indicators that you wanted to on the same screen, on the same monitor, and you don't have to concern how many monitors you need to, especially when you travel, to have it with you, but it is all integrated. You don't need this kind of bridge inside of you mentally. That's why you can make a decision much faster, because you don't need this extra mental efforts. That's why the integration on the same chart make sense. But none of the other software doing that, because they're simply copycatting behind the Bookmap. Number one, what they're losing congruency in trading. When I'm trading, I want to see all of the co-factors and co-signals. I want to see that how the one impact another, how the heat map impacting footprint, how the footprint and the zones on the footprint, like imbalance zones, they congruent with volume profile or the heat map. I need to see how they play with each other, because that is the key for me to come up with the conclusion and decision for entry, exits, stop losses, take profits. That's why the integration is super important. Why do we need that speed? Because we can place all indicators that I wanted to on the same chart, so I can see how they influence each other and producing me the signals or the cues, visual cues, where I can put my stop losses, take profits, and all of that. I don't need the two brains to match the non-time frame chart with the time frame chart. That's why the integration is super important. So, and this slide is actually a good illustration. Footprint, absorption, big trade, MBO DOM, icebergs, volume profile, delta 1, delta 2, market speed. It is the all indicators for the order flow. It can give us additional X-ray inside. So we're not only seeing the tops and bottoms, ups and downs, we can see why it happens. We can understand the reasoning why the price moves where it moves.